What could tariffs do to global markets and liquidity? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Christopher Tipper, Chief Economist and Strategist for the Ainslie Group. Hi, Christopher. Welcome to the show.
Hi, Maggie. Thanks for having me. What a weekend, hey?
What a weekend. This is never going to end. I'm going to be in May, and people are going to say, stop saying this because what a year, what a month, what a weekend. I'm so grateful that you're on and curious to get your thoughts because you are based in Australia and you are kindly starting your day with us. So it's going to be really fantastic to get a little bit more of an international perspective on what's going on. And Ainsley has a really long history as a bullion dealer. Your past is in gold, but then in 2017 became, if I'm not mistaken, Australia's first over the counter dealer in cryptocurrency. So you've got this really interesting sort of intersection that you're sitting at, hard assets and digital assets.
Well, and that transition was really interesting as well because at the time it was driven by customer demand because you had people who were traditionally bullion people going, well, I'm also interested in this new asset class that's emerging that has some of the similar properties, that hard money properties, particularly when we're talking about Bitcoin back in 2017. So people were wanting to swap. They were wanting to swap their bullion for crypto or the other way around. They had crypto and they wanted to cash out at those highs into bullion. So that really started that process there. But you're absolutely right. It's a fascinating intersection to be at in the markets, particularly at the moment where we've got gold at all-time highs on the back of what's going on. When you mentioned with tariffs, it's really sort of lit a fire under the markets in both directions of what's going on, that and crypto. So it's been an interesting place to be sitting and observing from, because those assets are certainly ones that are experiencing the majority of this move at the moment.
Yeah, and with the changes in Washington. Hey to everybody in the chat. And we were joking before we came on air, Chris, that it's beautiful behind you where you're sitting, and a lot of us are mired, at least if you're in the East Coast. But even some parts of southern U.S. have been mired in really weird, hard winter weather with snow all through the South, and so people are commenting that, including James right away, saying it looks really nice
It
in
it
Australia.
it
We're
is very
jealous.
nice here.
We're all
It's been a little
jealous.
bit too nice, been a little bit too hot here, but but I think I'd probably still take that over the mine in snow.
Yeah. So let's dig into this tariff issue a little bit. We did see US stocks and Bitcoin fall pretty hard early in the session when it looked like, that the tariffs were going to be put in place. They recovered somewhat when news spread that the US was delaying it. But, this is, I mean, every time you blink, there's a new headline out on this. It's
Mm.
so hard to handicap what's going to happen. Just from a sentiment perspective, does it feel to you that investors are adequately pricing in the risk around this, or does it seem like people are a bit complacent, like, yeah, this is just negotiating and they're not really going to go through with it?
Uh, we've been discussing this ad nauseum amongst sort of my friends and peers in this space, because it's a really interesting question of whether it is negotiation or not. But I don't think that really matters at the end of the day. I think what matters is that we've experienced a massive injection of uncertainty into these markets. And we know, 101, investing 101, markets don't like uncertainty. So I think it doesn't really matter at the end of the day whether it's a negotiating tactic, whether there's going to be follow through. It matters that we've experienced that those big drops. And I think it's very interesting when you look at crypto Twitter this morning, everyone sort of cheering that it's all over. I think, well, when does an event of that magnitude get absorbed by the markets in one session? That to me doesn't feel right. And you've seen, particularly you look at the Nasdaq, that sort of breakdown. It didn't really recover right back up to the top of that. Some of the cryptos might have, but there's a lot more speculation in those assets. So I would argue that I don't think we're anywhere near the end of seeing the impact of something like this yet.
Yeah. And, many of the guests that have come on have brought up the point that we're unclear whether this is a negotiating tactic or this is a change in policy,
Mm.
sort of national security driven change in policy in terms of reshoring. If this is an attempt to raise revenue against it, we don't know, what the
Yeah.
end game is. And that's a really big question that's hanging over it. So if we zoom out a little bit. You've done quite a bit of work looking at global liquidity and the macro cycle and the crypto cycle and where we are with all of that. So, From a liquidity perspective, and many of our listeners know Michael Howe follows this closely. I know you look at his work. From a liquidity point of view, where are we right now, and what does that tell you?
Look, I bought some charts and I'll hopefully be able to
Yeah, while
bring
you
them
get
up
them up,
here.
I will just say that we'll put these in the chat as well. So if you're driving and you're listening and you can't hear them, sorry, rather see them. Hopefully, if you're driving, you can't see them. Then, or if you're just busy and multitasking, don't worry. Or if you're on a small screen on your phone, we'll share these with you afterwards. So, but
And there'll be more slides in there that I won't reference today, but this is how we look at it. We're seeing really that work that Michael Howe does, who he is the godfather of liquidity, and it paints a picture that the liquidity cycle is increasing at least until later into this year. He would argue, and we agree, that ultimately liquidity is still fragile. However, it's looking pretty good from the macro cycle perspective, where you sort of look more generally at what's going on in the economy. Things are looking great. I mean, we had the ISM number last night, our time, today, your time, just above 50. So we've got that sort of positive momentum happening there. Everything's looking pretty good. The question is whether at the moment we maintain that with this disturbance to the market. I would argue we probably do. And if I bring up sort of another chart to show or really answer that question of where we are, I think it's probably this one, where I would say if you look at that as the 50 line that we're sitting at, you've got we've been bumping around that 50 line, but we're not at the top. And global liquidity, as a general rule,
mm.
has always peaked much higher than this. So we still expect that we're going to get that later in the year. This is probably the choppy interim time that we have to go through before we get there, I suppose. One last little point to look at here is when you actually look at the weekly data, the global liquidity data at a weekly level that cross-border capital puts out, we have seen that tick up. So we've been waiting for that for quite a while to see that there's actually some positive momentum there that we can get out of this fragile state. Whether the grenades of volatility that have been thrown regarding tariffs throw that off track or not, we don't know yet. But everything has been looking pretty good up until this point that really in the first half of this year, liquidity conditions would continue to improve. And overall, we would see that as very positive, as a very positive backdrop.
Is that positive for risk assets? I mean, would equities and crypto do well against that backdrop if liquidity is rising?
Historically, absolutely. I mean, Michael Howell would refer to it and say that the easiest time's over, that was sort of what we saw last year, those massive rallies, but there's still more to go. And that's how I would see it as well. The risk assets have not finished where you would expect them to finish with following through on that liquidity cycle, barring a major setback. But at the moment, those setbacks are probably still buying opportunities while that liquidity situation remains positive.
So it's interesting because it feels like there's so much risk out there, but that wouldn't be the case. I suppose is the liquidity being driven by, all of the fiscal and all of the capital being put to work, and is politics the risk, or how, like, what's driving that liquidity?
And that's a really good question because at the end of the day, we have to remember that global liquidity, the first word that's global. And it's not, even the US hasn't actually been helping the liquidity situation a lot throughout really the last 12 months. It's been at best sort of stalling or, treading water sideways. But you look at the situation in China, you look at the situation in Europe, they're now at the point, China's a perfect example. You've got a situation where their rates, their bond yields were plummeting. They're in a spot where they can inject significant amounts of liquidity without having the other issues that you would expect, like inflation flowing through, all of those other issues that hold the US back from really fully turning on the taps. So I think another way to look at it would be I look at this, what we're seeing at the moment, this bit of market uncertainty as potentially a very positive thing. It puts us on, I keep referring to it as it puts us on the most bullish timeline. And the reason I say that is because it allows potentially the US to do a similar thing to the situation I'm arguing that China's in at the moment, or Europe, where you see that little bit of weakness. Arguably, they're seeing a lot of weakness, but you see a little bit of weakness in the US. and then the policy response from the central bank can change. It frees them up to
Mm.
actually put in this much needed liquidity that can't really happen while everything's just going along swimmingly well.
So you don't see any kind of recession in the US?
No, there's no indication of that. That would be something that would be still off into the future, and really the tools are in place. Why would we see a recession in the US when at the moment they've been tight on liquidity? If anything, there's plenty of capacity to expand liquidity to stave off any recession fears. So unless there's a massive shock on the back of these sort of tariff talks and what's going on there, I don't see recession in the immediate future at all.
Yeah, this is where the political risk comes in because what are you thinking about in terms of inflation? Like if we look at that macro cycle that you think we're in, um, there are an awful lot of people forget about the tariffs who believe that we're in an environment where going to see higher inflation. It's just where we are, and then throw tariffs on top of that, and you have a real potential problem. What are you? How are you thinking about inflation?
Inflation at the end of the day is going to be actually in the interest of a government that is trying to get rid of a whole lot of debt. I think we often forget just how big that debt pile is and just how big that refinancing risk is later in the year. If you One way to reduce that is through a higher accepted inflation rate. And something we've been talking about a lot internally is this idea that the Fed will never say it, but is 3% acceptable as a new 2%? You don't really hear anyone kicking up a big stink about 3%. But when you think about it, that's 50% higher than 2% was. It's a big jump in what they seem to have quite effectively adjusted everyone's expectations in to say, well, we can have a higher inflation rate sitting here and it's all good. No one's really kicking up a stink about that. The markets seem to be absorbing that. So ultimately, that is what is getting rid of that debt purely through debasement. So I'm not sure that inflation is quite the problem that everyone is concerned about, unless it were to spike significantly higher from here. And that is political risk, exactly as you said. But we don't have any indication of that yet. And I know the trueflation numbers, looking at them the other day, which is before all this sort of came out, but the first of the month trueflation numbers, they were quite down. If anything, they were much closer to that 2% target. So it's just not an issue yet. It could be, but it's become one, but it's not an issue yet.
Yeah, this is why it's so hard because there's so much uncertainty. Because again, all paths lead back to a lot of government policy, which is just such a wild card right now. All right, so I'm super interested to hear what you think about the moves in crypto, and where we are in that cycle. And let me just premise this because I feel like maybe just because getting over that 100,000, it was so much sort of fireworks around that and so much enthusiasm, and the move up through that was so
Mm.
powerful. And you have all this really positive sentiment about what appears to be a very pro crypto administration that's sort of moving fast and breaking things. I think we're getting a briefing on crypto tomorrow, if I'm not mistaken.
Yeah.
So there's just so much anticipation. And then I saw this really interesting post from Jeff Dorman. I don't know if any of you follow him, but it was on LinkedIn, I think, actually. And he was saying that it's actually been a 6-week bear market that's been masquerading as a bull market. And he pointed out that since the FOMC meeting in December, that Bitcoin, Solana, and Ripple are now down 11% each, ETH down 35, and then of course a lot of those other tokens down anywhere between 25 to 80%. And that retracement, and I was really struck by that because if you're not locked into those price charts all the time, you kind of
Mm.
feel like there's an enormous party that you've missed out on. So talk to me about what you're seeing in the crypto cycle here.
Well, I'll bring another chart up for this one, I think, because I think people probably are looking a little bit too closely. And you just made an excellent point about when you actually look at what's happened there. Um, this should pop up. Yeah. So there, when you look at this is looking at it's Bob Lucas's work on cycles, and he always sort of says you go through these 60-day roughly cycles in Bitcoin, and he was calling really from this last top that this next cycle was going to be sideways, that we were going to have that sort of choppy move, because people have a very short memory that it was only one 60-day cycle ago, only a couple of months ago, that we saw those massive gains. And when you look at it in this chart, it just hasn't really been properly retraced.
Mm.
And retracements can happen in two ways, particularly in crypto. They don't have to be the price crashing back down, but if it's not going to be the price crashing down, it happens in time. You would expect some time to pass before you saw the market really taking off again. And one of my arguments on this, which I'll bring up another chart to show, has been that really probably Bitcoin got a little bit ahead of itself. And when I can find the chart, hang on a second,
Yeah, we
here
did see.
somewhere.
I mean, it was just on a rocket ship during that, that announcement, and post-election, the post-election enthusiasm, I should say.
It absolutely was. And when you zoom out, and this is putting the chart in a log scale. So, putting a chart in a log scale gives you a very different view of the world. But what was really important is when you look at what's actually was happening with the rate of change of global liquidity, it was clearly pointing down through that period of time. It was, which is the argument I was making before. We hadn't seen everyone really turning on the taps, it really ramping up in terms of global liquidity. So at the same time that was pulling back, and it was still a positive rate, like it's down to about zero now. That's still, it was heading in the right direction, but really stalling. Bitcoin and other risk assets really taking off from there would be my definition of getting ahead of themselves,
Mm.
because the underlying support wasn't there. So it's okay for a little bit of front running where the market sort of tries to get a bit ahead of what's going on um, in the underlying liquidity picture, for example. But in this case, I think it was too early to be calling that we should just be absolutely taking off, even though there was a lot of positive good news. Like, I'm not denying that at all. Who knows what we hear tomorrow when do we hear about Bitcoin reserves, strategic reserves? Do we hear about tax changes to how crypto's treated in the US? Anything could be bullish in that short term, but I still think until that underlying picture has turned, it's probably getting ahead of itself, and the risk is still not necessarily that it heads significantly lower, but that it can't head significantly higher until the tailwinds are in place. That's how I would word it.
Yeah, that makes a lot of sense. So it looks like it's really tracking. There are people are always looking for the moment when Bitcoin decouples from risk
Mm.
assets, right? That's the whole. And it seemed like that was happening, but now it seems like maybe it's, on the back of the tariffs, at least it has these moments where it's still very much trading like a risk asset. How do you view that?
I, I think it probably is trading like every other risk asset in that regard, maybe a little bit closer to a hard asset like gold than a traditional risk asset, but it's still trading according to what happens in the markets, of course. But I think because we're still on that adoption curve, because we've still seen such significant growth in the market, it distorts it. That's almost the point of looking at that logarithmic chart, where you need to zoom out and say, well, actually, it's still following the exact same fundamental principles as every other asset here. It just gets distorted by the size of the moves when those moves happen. So that's probably more my view on it. I'm not sure it ever really decouples from what's going on in the underlying liquidity cycle, just as gold hasn't decoupled. That doesn't mean we can't get a step move higher um, through adoption, for example, where the lows are higher and the highs are higher when it still pulls back. So I think that's part of what adds the confusion with everyone when they're looking at these crypto assets, because they're not really used to looking at an asset that hasn't been around for 100 years to draw on 100 years of history of price action. They're looking at something that's still relatively new, and really looking further back than probably the last two cycles, an absolute maximum, is too far to look, because what was it back then?
Yeah. Yeah, well, that's the thing. If you think about commodities, you have these parabolic moves in commodities, but you don't think too much of it because they've been around and you have a history to look at the correlation of why these things happen. It feels different with Bitcoin, but you've also got this sort of political narrative on it, which is that it's this alternative and this is this sort of new,
Hmm.
away from fiat currency. So that gets muddled in. So I think that for people who are trying to think about whether this has a place in their portfolio or not, or, whether it's just a casino, there's so many people that struggle with that still because how do we wrap our head around this? It's so new. How do you
Well,
handle that when clients say something? Because in the chat right now, There's just someone, Jim, I hope you don't mind if I read this. Tariff war blows up into a global recession, CBDCs, end of crypto. Like there's a narrative where people are
Yeah.
like, I just don't see how this survives. I sent you comments from Elliott Management warning
Mm.
about them being very concerned about a massive blow up in crypto. So those things are out there.
And I think that's actually how we look at it. While at the end of the day, that going back to your question about if you're a retail person, should you have some in your portfolio? How do we think about that? And answering these questions as well. We never suggest it's your whole portfolio. The point is, if you want a risk asset that has high volatility and high correlation to what's going on in the underlying, in this case, global liquidity story, then it's the right type of asset to add a little bit of to your portfolio, because then you result in those outsized returns. The trick is, of course, not holding that necessarily through those significant drawdowns. So all those comments are valid
Mm.
to say that crypto will probably go through significant drawdowns. I mean, I would probably push back against the central bank digital currency as being the end of Bitcoin, for example, because I think lots of people are not going to be very happy about central bank digital currencies and will be looking for an alternative. So the flip side of the argument could be that it's the absolute tailwind that Bitcoin in particular needs to become much more significant as people look for an alternative. Probably the same with gold, because they just don't want to be holding um, storing their value in a central bank digital currency. But I think this idea that um, is it too risky? I mean, that's kind of the point. If you can harness that risk, that's the whole reason that you take on something like Bitcoin, because you want to have an opportunity to take advantage of that really outsized gain to the upside. Um, and if you're managing that correctly by sort of not just necessarily holding it the whole time, you can
Yeah.
significantly add to a portfolio.
Right. And you're always resetting, right? It's that like if you don't have a high risk tolerance, it's a tiny piece of your pie. But if
That's
you're,
right.
on the wheel that we all look at when we have to make these decisions, like it or not. I want to come back to that for a second, but I want to look at some of the questions in the chat. And J asking if 3% is the new 2%, what does Chris think about bonds and the yield curve in that environment?
I'm really concerned, and it's really interesting because I butt heads on this all the time with a colleague who is not concerned, because he keeps raising the point that we know the outcome here. If the bond yields break higher, it will just be more QE. Ultimately, we know the buyer of last resort, in this case, will come in and they will buy up all the bonds. So we it's not really an issue. Um, I probably think I end up conceding to him often in that debate, and I think my concern is more on the longer term. What happens if there's effectively a taper tantrum type scenario where you just can't bring it under control? The bond vigilante argument that really the bond market just gets out of control and can't be brought back to heal because there's a loss of confidence going
Mm.
on. And I am worried about that later this year. But ultimately, I really can never seem to get past the argument that's made to me that we know the Fed will come in and buy those bonds if necessary. And well, do we know? I mean, maybe we don't know. Maybe we don't know. Maybe things are different. Maybe things are different under a different political risk that you were describing. But
Mm.
traditionally, we know that is just not going to be allowed to spiral out of control.
Yeah, it's interesting the way you phrased it because if I'm hearing you correctly, it's not that that won't eventually happen. It just sounds like you're worried about something breaking in the crisis that would prompt them to come in. Sort of
Yeah.
in the same way we saw the speed that Silicon Valley Bank went under with, and the
Yes.
sort of like large tentacles that that potentially had. Now it was ring fenced, but if you're talking about something much bigger, we've seen this in the past, where hedge funds or banks or an institution that's too big to fail has exposure that people didn't know about. And the guilt situation in the UK was
Mm.
a little peek at that. Again, it was contained, but it sounds like you're saying what is the damage in that period before the
Yes.
authorities come in?
And the risk is very high of a misstep in that scenario, because the argument against my fear is that in the gilt, which I always keep referring to as the Liz Truss head of lettuce
Yes.
debacle. That was a very entertaining period of time. But when you look at what happened there, that was because the UK doesn't have the global reserve currency. That's the counter argument
Mm,
to say that ultimately the US, because of the privileged situation that it's in with the US dollar, simply that simply cannot happen. However, we don't know that it can't be politically mishandled and spiral into something else. And that probably is the risk I'm more worried about, because what is it, 30% we're expecting of um, debt that needs to be refinanced this year, a very large amount that is going to be traditionally putting upward pressure, significant upward pressure you would expect on bond yields. I, I'm concerned, but I keep getting um, told to not be so concerned. So we'll see.
yeah. But it's I think a lot of people are going to relate to that when that niggling voice keeps coming back. It's something you should pay attention to and keep testing
Yeah.
because
Yep.
there's that's where you see the blind spot or the potential for trouble. Uh, China. So when we're talking about liquidity, I'm going to sort of circle back to the first part of the conversation. And you're right, it's global liquidity. It's not just the U.S. And there's been a lot of focus on fiscal here because of all the amount of money that was spent around infrastructure and all the different bills and the fiscal dominance that's now in effect here. But you mentioned China, of course. You're sitting there in Australia. You have a background in hard assets and commodities and gold. We just had Harry Melandri on Friday, who said when you're, I think it was Harry, or was it one of our other guests who said when you're uh, playing. When you're looking at gold, you're playing poker with the Chinese central bank. I mean, that's like the biggest player right now. And so how are you how are you thinking about China here? Especially we've got them in the crosshairs with tariffs, although not as high as Mexico and Canada right now. And we've got this issue of, uh, you know, where is their economy? Is it coming back? Are they taking the measures they need to? How are you thinking about China in this matrix?
China needs to devalue the yuan. And what I find fascinating, like they've obviously been defending that, like they don't necessarily want to do that, but devaluing the yuan solves a whole lot of issues potentially for China, because at the end of the day, their exports become cheaper. It solves several problems for them. I think that secretly, probably not publicly, you've got probably the Chinese government not overly unhappy with what's going on with this tariff situation in the US, because ultimately that is going to give them the cover to be able to make bold moves necessary to inject liquidity, to potentially devalue the yuan, which injects liquidity. There's lots of things that can be done under that cover that previously couldn't be done. And you'll remember it wasn't that long ago that the US was threatening China with retaliation over any potential devaluation of the yuan. This was, not really that long ago. So I think it may not necessarily be the negative that it seems to them. I mean, they will obviously carry on like like politicians and countries do in these negotiations, how this all works. But ultimately, it could be quite a positive to see the capacity for them to really do some serious liquidity injection and some serious devaluation of the yuan under absolute cover to say, well, we didn't start this. We're just, doing what we need to do to protect ourselves. So I see China has the potential. Whether it will happen, again, they haven't really so far delivered on the liquidity front. There's been promising signs, but they've spoken big on it. They've said they're going to, but they haven't really done it yet. But yeah, I don't see what's going on at the moment as a negative for them particularly at all.
Mm. Does that make Chinese assets attractive? Do you see them continuing to be a steady buyer of gold?
I absolutely see them continuing to buy gold. They've been buying that very heavily, and you can speculate on why that is. Probably a lot of it is to do with diversifying away from US bonds. Is probably a big part of that. Um, Anticipating what is unfolding potentially. Um, yeah, I think I don't know a lot about the Chinese equity market. I wouldn't be suggesting rushing to China there, but I am suggesting that the potential for significant liquidity injections out of China are probably the play, and the assets that take advantage of that would be things like gold and ultimately things like Bitcoin as well.
Mm. We have such an interesting. We're almost out of time. But we have such an interesting, really robust conversation in the chat about tariffs, and I think that somebody summed it up really. J and J summed it up really wonderfully, but saying that the tariff question is just so complicated. It's so complicated to work through. There's so many different angles of it. From an international standpoint, how do you wrap your head around that level of headline risk?
I think that level of headline risk is significant. It was very interesting yesterday watching CNBC, sitting there, and just it was surprising to me the companies that were or the companies I were talking about that faced risk from this, that you hadn't really, that they were not headline companies you weren't thinking about. The potential is significant for widespread ramifications. So whether they're positive, actually, arguably, a trade war is never positive. There are casualties on all sides. It's like any other war.
Hmm.
Ultimately, there are winners and losers, but net net, we probably end off worse off under a trade war because there's retaliation. Um, so I think when you look at that internationally, it's problematic. I think bringing it right back to what I said at the start, the bigger issue is not what happens specifically. It's that markets do not like the uncertainty. And the fact that crypto, well, all crypto really rallied massively on what we heard coming out of the conversations between President Trump and the President of Mexico uh, is concerning in a way, because that was all, yes, we had a good conversation. We're going to pause tariffs for a month and negotiate. Well, all that is another way of saying is uncertainty. Where there's no clear answer. So for at least the next month, when we talk about just that one example, there's uncertainty in the market. And if you compound that up, looking at all of the other examples, I mean, the EU, where do we even begin? When you talk about that, all I see in that regard is uncertainty. So even though I've painted a very positive outlook for liquidity and where I think we end the cycle, I don't think it's going to be a straight line up. I think this is exactly the type of thing that's going to cause a whole lot of volatility between now and the end of the year.
Yeah, that's, I have to say, one common theme I'm hearing, and people have varying opinions, but one common thing I'm hearing is just that we could be in a period where we see big swings. So even if you, in the end, think some asset class is going to end somewhere, that the 10% up, 10% down, like a very sort of wide range of swings is possible, and people can kind of easily get hooked onto a narrative that that's the future. But it's, it's likely to be up and down. May be very good for very savvy traders, very hard if you're an investor, especially if you don't have an appetite for very much risk. Chris, I never asked you where you think. Do you primarily um, focus on Bitcoin, or are you looking across the crypto environment?
We primarily focus on Bitcoin, but always you can't help but look across the broader environment. But for me,
I'm reading that as Chris has a secret stash of altcoins that he focuses.
we all have a secret stash of altcoins, Maggie. Don't deny it. But at the end of the day, for me, Bitcoin is enough volatility risk. I don't need to go further out on that risk curve, but I fully understand why people find that appealing to do.
Yeah. Are you watching XRP? Adam's asking.
We have a whole lot of clients who there seems to be a natural affinity between gold buyers and silver buyers in particular, and XRP buyers. And
Hmm.
oh boy, do they've done very, very well over the last few months. And yeah, we've seen a lot of movement in that space. A lot of people actually rotating some of their profits that are hard earned profits, I'll say, for they've been holding that for a long time, rotating them back into precious metals, in particular silver.
Oh, that's so interesting. I was asked about that, or found out someone at a dinner party was following that really closely and investing in it, and I would not have suspected, did not have any idea she was paying attention to crypto. So I have no idea if that's like the equivalent of the taxi driver asking you about it or not. You can take that for what it's worth. And so where do you think Bitcoin's going? What are you expecting?
Well, I don't think we're at the end of the cycle. So I expect that we're going higher. When you want to put a price target on it, it could be anywhere from 150,000 to $1 million. You don't know. Like it's depends how big that blow off sort of top last phase of the cycle is, when all the planets align and when everything sets up. But at the moment, no matter really how far it falls here, I still don't think that's the end of that cycle. So I would still be thinking that there are buying opportunities in this disruption, but you have to have a pretty solid risk appetite to be able to weather those, because exactly what you said just before, it's going to be a wild ride.
Yeah. Well, that's it. If you understand your risk profile and you understand the risk profile of the asset that you're buying, then you're okay, right? Then you're making an educated decision. We don't want to mismatch on either one of those sides. That's what we want to try to avoid. Uh, we had a poll: tariffs. Hate them. I don't know what to think, and love them. Wow, this is really divided. It's not the hugest sample in the world, so let's not read too much into this. But hate them 40%. I don't know what to think 37%, and love them 22%. That's about right. It's sort of
Hmm.
split a third across the way. I think just underscoring what you all said in the chat as you're trying to work through it. There are, you know, it's sort of all of the above, right? We just don't know because we don't have a crystal ball how it's all going to work out because it's just so much uncertainty around.
Well, put it this way, my response to that would be hate them as an economist, love them as a trader.
Very smart, Chris. See, this
I
is
can have a bit of
why
both.
I'm so happy to have Chris on because you do have to split your brain a little bit. This, I would also say, we keep encouraging people to try to um, sort of have a political thought about it if you want, but then have an investment thought about things.
Yes,
And those
really
two
important.
worlds have seemed like they've gotten a little bit murky here, Chris. Do you sense that from where you're sitting?
Yes, and probably my final point on that would be the last 2 weekends have been absolutely on fire in terms of picking what was going to happen Monday morning based on what was going on in crypto Twitter, what was going on um, across X. If you just looked at what the top story was, I love how Grok does this now. It sort of summarizes what everyone's talking about, and you get those headlines. The DeepSeek thing, remember that was only, it feels like that was months ago. That was a week ago. And you saw that. And then on Monday, we had that gap down in the NASDAQ. This time it was the tariffs, because that obviously happened late Friday. The markets were sort of closing into that. And that was all everyone was talking about. So you could see that, and then the flow through on Monday morning. But to your political point, some of these moves are driven purely on speculation around the politics, not necessarily, nothing has changed in 2 weeks, really,
Mm.
other than wild speculation on what's going to move in potentially in the future and the politics and all of that behind it. So it has become a real driver, absolutely massive driver of what's going on. And I hate to say it, but we probably need to be all paying a little bit more attention to the headlines in our social media feeds, not necessarily going deep in down the rabbit hole with those headlines, but paying attention to what they are, because they certainly have been driving markets for at least the last 2 weeks.
Yeah, and it sounds like it certainly helped you the last couple weekends, Chris.
It's
So
it's it's
keeping
been
that
it's
trader
been
hat on.
interesting.
Christopher, it's been so wonderful to have you on. Such a pleasure. I'm so glad you're able to join us.
Thank you, Maggie. I've thoroughly enjoyed it.
Good. Well, we're gonna do it again. And thanks to everyone in the chat for rolling up. Listen, these are really, really long active weeks. So we gotta sort of get ready and prepare ourselves. And Chris certainly helped us do a great job at that tonight. So thanks to all of you. If you are listening and haven't hit the subscribe button, please do so. And you can check out a summary of this, and we'll dump some charts in on Substack. So if you're not following us there, please find us there. And we'll share some more information. So, Christopher, we'll see you again soon, but enjoy the rest of the beginning of your day.
Shall do. Thank you, Maggie.
Thanks, everybody. Take care and good luck out there.